Hello, 4-Year Journey members and followers. This is Bob Loukas. It is October the 2nd here in New York, and I hope you're doing really well. I'm excited to get going on another video. It's been around 6 weeks since the last one. So I think this is going to be fairly action-packed. I probably would go for around about an hour, I think. A lot of topics to cover today, a lot of questions that many of you have asked for. I've tried to group many of the questions from Twitter and YouTube together into like-minded topics. And I'm going to try and cover as much of that as possible for you today here in this video. I know there's a lot going on, a lot of significant price action on the downside of late, and I'm going to cover a lot of that here today as well. Before I do that though, let me quickly go over just some housekeeping items, which I think is important, and I'll try and get through this fairly quickly. Just a typical and standard disclaimer that I'm not a financial advisor, I'm not a registered advisor, and none of this is, financial advice to you. I am outlining essentially what I'm doing, how I'm approaching this asset class, how I'm investing in this asset class, what I see, and essentially what I'm doing. If that provides value to you, then that's great. If it doesn't, if it disagrees with your own personal strategy, then so be it. Maybe it's another idea and maybe some more help for you. But in general, I'm just here to help as much as possible. And I also, as you know, I don't have a huge amount of personal exposure to Bitcoin specifically. I have maybe a large enough position, but in terms of overall wealth, I'm risking no more than 5%. Just on Bitcoin alone. I'm trading Bitcoin as well significantly. So if Bitcoin were to, for whatever reason, essentially disappear, yes, it would hurt, but it would not cause significant financial harm. And I think that's a very important aspect. And I think this also allows me to remain calm and patient with this market during 40% declines and 100% rallies, because I don't have the type of exposure that scares the hell out of me. And for anybody that has that type of exposure, you already have experienced how difficult it is with such a position as the market goes up and down in such a significant manner. And I'll cover a lot more of that in a portfolio section later on in this video. Let me get back to some more of the disclaimers here. This video covers topics and questions that you've had and provided to me, and I have an agenda posted below in the comment section. I've also tried to put in the minute and the point in the video where the topic is discussed and addressed, so hopefully that will help you out. Also, another point here, I'm not a YouTuber. I don't intend to become a YouTuber. I don't earn any significant income from YouTube here. All revenue that YouTube will give me, which is not much, it's around about $300 or $400 a month, it looks like, I will donate to followers and subscribers of this channel through a post in the community section each month, trying to give away maybe $300 to $500 worth of Bitcoin to 3 or 4 or 5 of the subscribers that provide an address to me. Just a way of giving back to viewers and thanking you for liking this video, hopefully, of course, if you do like it. And also, as it is free content, I would ask that you subscribe to this channel, but also share the link to the video either on Twitter, Facebook, or any other social media channel that you frequent, and also share it with friends and family. That would be appreciated, and I would really thank you for doing that. Lastly, there are many scammers out there impersonating either myself on Twitter or via email specifically, and some of these do look pretty convincing on first glance. So let me make it very clear, as I always do, I will never ever solicit you on email or any other place for any other reason. I do have a couple of paid sites, as you know, but they are their own websites, not covered in this video. If there is anything that I feel you need to know about, it will be either on Twitter, or it will definitely be on Twitter, and it will be on the 4-Year Journey website. That is 4yearjourney.com. And that's the only place, the only two places you would ever see me make some type of announcement for any type of product or any type of service, whatever it might be. Any other avenue, any direct solicitation is not me, and you should consider that a scam from the beginning. Okay, let's start with the first topic here, which is by far the leading question that I had around the topic of the recent decline, whether or not that's now the end of the bull market. Did we ever get into a bull market? Are we going back into a bear market? Are we seeing new lows? Those types of questions probably made up around 40% of the total. And that leads me to believe, so let's talk about this one. This is the elephant in the room. Leads me to believe that many of you are still either too leveraged or have a position that you cannot handle and will not be able to handle even if you manage to get through this period of consolidation and into higher prices in the future. It also tells me that you have not learned the number one strategy, I guess, at looking at long-term investing and hodling, in that you should not be focused on short-term price movements, even price movements of 40% or more in nature. We had a market that was up 300 to 400% more recently, and the same people that are worried today were, over the moon and already counting their gains, counting how much they would earn when Bitcoin hits 50, 100, 150,000, not fully appreciating that markets do go up and they go down at the same time. One thing you must understand is if we're looking at investing in an asset class that we hope is going to go up by 10 or 20 or even 50x, which those types of gains are essentially unheard of in the history, of investing. If we're looking at those types of gains, or for example, as we saw from the December lows to kind of the June highs, where we saw a 300+% rise in the price of Bitcoin, such tremendous potential comes with tremendous volatility, and that means tremendous upside gains with absolutely significant retracements in price. They go hand in hand. You cannot have one without the other. And if you're in this, looking at the gains, counting how much you have on paper when Bitcoin goes up 300%, and then you start to look at how much you're going to have when Bitcoin gets to 20 and 50 and 100 and so on, you have to also be prepared to weather the storm when Bitcoin drops by 30, 40% or more. That's just the nature of the type of investing that we're doing. And if you're looking at this as a one-way street to the top, then sadly, you're going to fall victim to this market. And you're going to end up probably selling a lot of your Bitcoin on significant dips through the panic because your exposure is too high. And then when the market turns and rallies by 20 or 30 or even 50% rapidly, you're going to essentially get the FOMO bug. You're going to know that the market is moving high. You're going to begin to chase, and you're going to end up buying back Bitcoin and buying fewer Bitcoin with the amount of capital that you have, and pricing yourself higher from an average standpoint. And that's how people lose in a bull market. They end up averaging themselves higher, thinking that they're smarter than the market, or, like I said before, over-leverage the market to the point where they cannot think clearly. They're looking at the daily chart, they're looking at the 4-hour chart, and they're not looking at the weekly chart or even the monthly chart. And they're not taking that step back and saying to themselves, hang on, what time frame am I really investing on? Am I looking at this from a 4-year cycle standpoint, or am I looking at this from a daily standpoint? Am I looking at the news from a day-to-day basis? Am I getting caught up in all the fear or the negative news and media that's out there, allowing you to be influenced by short-term movements in price? I'll give you a perfect example of that. I've had so many direct messages and emails or tweets from people who are concerned, right? And it goes, and that's evident by the fact that so many of the questions are about what's going on here. Well, I'll tell you what's going on. Bitcoin's down 40%. It's at or close to $10,000. It's around $9,000, or so dollars. if I had told you 9 months ago that Bitcoin by October would be 9,000 or 10,000, let alone the fact it got to 14, but let's just ignore that. If I told you it was at 9,000 by October, what would your reaction be? And I can tell you, when Bitcoin was at $3,200 or $3,500 at the start of the year, you would be absolutely ecstatic with a Bitcoin at $9,000 by this time of the year. But yet, most of you kind of choose to look at this from a short-term lens, from a glass half full type of perspective, and look at this only from the fact that it touched 14,000 recently and is down 40%. But in reality, Bitcoin has more than doubled this year. It is the only asset class to be up over 100%. In fact, there's no asset class that ever goes up 100% essentially in a year. And Bitcoin has done that. And yet most of you have either traded this in and out where you probably are down for the year. There are people who supposedly are hodling and are actually down on a dollar equivalent standpoint because they think, again, that they can time the market even from a hodl or long-term investing standpoint. Or again, they are far too leveraged, thinking that if they put everything in, they'll be super millionaires. And that type of leverage or that type of size simply is too difficult to handle. Let me see if I can visualize this a little better for you. If you look at this chart here, the cycle, short-term cycle low here on June 9th when price was at 7,500, okay, after a consolidation. It took or spent just 17 trading days to this peak here on June 26th to a high of $13,880. So from 7.5 to 13.8. Let's take a look at what type of gain we're talking about here. So we're looking at the bottom here all the way up to the top. It rallied 85% in 17 trading days. In 17 trading days alone, it went up 80%. It has spent, since that time, a couple of months here, consolidating, and then crashed, but still remains above the June highs, the June lows, I should say. So 17 days, and everybody's in a panic when all we've done with Bitcoin here has all we've done is erased 17 days of gains, just 17 days. So if you are down overall because of this, it is because you are reacting not down here at the early stages, okay? You are reacting here with everybody else, everybody on retail, just like everybody did in 2017 here, okay? When everybody was making money except for you, and you thought, well, why aren't I making money? Or why don't I have more of a position? And buying too late in the cycle, and I'm talking about a short-term cycle there, and then getting too much of a position, thinking that it would be at 20 or 30,000 overnight, and then when it comes back down, you can't handle that size and handle that position. But look, again, focus on the longer term. Look at the weekly here. Okay, here's the massive increase we had. We've just retraced not even a third of that move back, okay? Many of you have asked if I'm concerned with the fact that Bitcoin has dropped 40% from the top, or that the 200-day moving average was lost, or there's some type of Elliot wave structure that looks really bearish. Look, at the end, there are no absolutes, right? There is nobody has a crystal ball in this market. Nobody knows where price is eventually going to go. Is there a chance that Bitcoin has topped for the next couple of years or the foreseeable future? Yeah, there is always that possibility. And that speaks to the leverage I talked about earlier, the type of exposure that you have, and the fact that there is no such thing as a riskless asset. There is no such thing as an asset that we are hoping can go up 20x that provides no risk. It's just impossible. You're fooling yourself if you think that hitting 100,000 or plus is a slam dunk sure thing. If it was, then I would have way more exposure to this asset class than just what I have, right? There's just no such thing in anything investing, especially one or something that has this type of potential. That's a fact. Now, even though it may not look like there are clear and danger, clear risks and dangers to Bitcoin, there are. And I don't want to speculate on what they may be. They're out there. The fact is that we don't know where price is going. But that being said, okay, we, or I at least, have a narrative and a thesis that I believe in, and I'm investing towards that thesis, because if I don't stick to that plan and don't back it up, then there's no way of me ever achieving it and realizing that goal. In terms of price action from a short-term standpoint, again, when market was going up week after week by 20 and 30%, I didn't question it. I said to everybody, expect surprises in Bitcoin. This is still early on in the entire life cycle of Bitcoin. It's early in a 4-year cycle. The market can surprise. Bitcoin's market cap is still absolutely tiny compared to other asset classes. And price discovery is very fluid. Volatility is very high. And we can get such moves. So again, back to the same theme. 40% decline after a 300% move is very normal to me. In fact, in the last video I shared, it was a public video that I had on my Bitcoin Live site. I showed exactly how I thought Bitcoin was actually preparing for a move to 8,500. So I'm about to show that right now. Here's a replay of that video, at least a clip of that video. Some type of shakeout eventually to end this cycle around the mid-September timeframe that comes on pretty fast action that drops rapidly and then reverses very sharply. That to me would be a perfect ending to this 60-day cycle. Also completing the consolidation period from the intermediate rally that started back in December, that really took off in February and went up by almost 300%. We needed and expected to see at least a 1.5 cycle consolidation of that rally, and that's exactly what we're seeing right now. So for that reason, I know a lot of people talking about thinking or hoping that we'd get another move up to 14,000 and above. I don't see how that's possible for at least another 3 weeks, but maybe even 2.5 months. And I'll get into that in a second. But I think we need to either, one, see the completion of the 60-day cycle right here. So something where we kind of come down here, we test all the support that has been keeping Bitcoin sort of propped up at this 97, 9,800 level, and even a $10,000 level more recently. Maybe hit that one more time, maybe even 2 more times. But I think, and maybe even get some surprise little mini rallies. But I think in general, we're going to come down and test these July lows at some point, and then looking for that capitulation down towards the $8,000 range. I would be surprised if we get below a $8,000 print. So seeing a 7 print would be a little surprising to me. And then reversing pretty sharply back up to this 9,000 level, maybe bouncing off it, maybe hitting some resistance first, but coming back into this area fairly quickly after that happens. This in combination with another 3 weeks of sideways action that frustrates all the new bulls that came in on that intermediate trend, then coupled with a breakdown in September, is really kind of the best outcome that bulls can have if you can hold on, because it really does shake out a lot of the weak hands in this place, and also the over leveraged bulls looking for sort of easy money, so to speak. This is how I see it playing out. And now back to today's action, sitting at 8,200 as of this recording. Do I think the price declines are done? I don't know. I don't think so, to be honest with you. Looking at some cycles here, some short-term cycles, and I don't want to go into short-term cycles because that is something I do cover on a daily and weekly basis through a paid service, and I'm not here to promote that, but just want to say a couple of things. We are not done, I believe, with the next cycle right here, and I think we are setting up for one more decline. I like I like this 7.5, 7.4, 7.6 area. We almost hit that area, that range just recently. So I think we could be looking here at one more small decline, form a cycle low, and then we can begin kind of building a base again. Whether it shoots higher quickly and kind of recovers this 10,000 range, or if it really starts to build a base in a much slower fashion, I don't really know. I just don't know at this point. And more importantly, it's not that important to us when we're looking at this weekly time frame. What we're looking at here is the market rebuilding its base, reaccumulation to occur after a lot of distribution up here. Price obviously rose very rapidly, and that unlocked a lot of Bitcoin naturally. All right, not that there were a lot of trapped holders, but once you get, you know, a 4x move in any asset class, you're going to get natural sellers. You're going to get people either who bought up here or held all the way down or accumulated in the bottom here, cash out, take profit. Why not? Okay, so we've had some distribution here, and I think we're going to go back into a reaccumulation phase. I think this massive spike out of the 4-year cycle low is now ending with this consolidation, and then we're going to get a different type of character or different type of structure to this market. We've been seeing shorter duration cycles here, around 40-day cycles as opposed to 55 and 60-day cycles that we saw during the bull market, and I think we're going to go back to more of a 50 to 60-day duration cycles and more of a foundation in how Bitcoin develops up to the $20,000 range before breaking out some point in 2020. That's what I'm thinking and predicting is going to happen from this point forward. And in fact, if you recall, or if you have watched some of my original 4-year cycle videos, of course, I didn't predict or expect this massive move higher. In fact, I thought this 6,500 area wouldn't get breached until probably around the August or September timeframe, and that we may be up to this $8,000 or $9,000 level by around about this time frame. So the only thing that's really changed is a lot of the structure of the market, and I think the way this market moved high took a lot of people by surprise. And if you look at the prior bull market, in start of the bull market, so here's the end of the bear market here in 14 into 15. You get this base building area, and then you get, you know, the accumulation early, and then you start to see price, you know, in the awareness phase really take off. And something similar kind of happened here as well in 2012 and 2013. So I think a lot of people were just looking naturally here at kind of this structure where it came back up to 6 and then built a base and then finally came up. So this is taking a lot of people by surprise, but I think when you kind of look at it from a longer term perspective, then it sort of looks more like that. Okay, so it's overshot here, and it's more of a reversion here back to the mean, and now we're going to find some better price discovery as the market begins to move higher in a more sort of more calculated fashion. So one of the questions which is very relevant, and I touched on it just before in this video, but let me go into a little more detail. Where am I wrong? It's not a question of where am I wrong. I've already outlined the fact that nobody knows the future, that Bitcoin has risk, and that we need to be prepared for that. Now, I'm prepared for this from the standpoint that I have the type of exposure where if Bitcoin does go to zero, does fail, or something happens where Bitcoin essentially just fizzles out and maybe stays around the $1,000, $2,000 range indefinitely, or whatever the case may be, it's not going to financially destroy me. Okay, it's not going to come close. It's gonna hurt, of course, but that's how I'm dealing with the inevitability. And what does that mean on the chart? So let's look at this here. I see this area where it collapsed back into the bear market lows, and the move back up, sudden up here. I see that line there as the line in the sand. Anything below that point at this, you know, at this point in the bull market, I would be concerned or beyond concerned, and I would then begin to believe that this rally here was a the beginning of a left translated 4-year cycle. I don't see a scenario where we are still part of a bear market that began back in December. This period here has elapsed. That has elapsed is too long. I see this as a clear-cut 4-year cycle low. I see all the evidence of that, and I see this being part of a new 4-year cycle. But 4 years is 4 years, and the next big low is 4 years out, as far as I'm concerned. And if we have topped here, and if we are going to go back below the 6,000 range, and maybe even test those lows, then I think the top for the 4-year cycle is already in, and that becomes an extremely left translated cycle with the top right here in June, and then that we spend the 3 to 4 years between this $14,000 range and the bottom. I think that's unlikely. It's not something I expect, but it is a possibility. I don't really expect a situation where we have Bitcoin trace all the way back, make new lows, as some people would want us to believe, and then call that an end to this bear market that began back in December. It just wouldn't fit my, my strategy and my cycles, and it just wouldn't make any sense as far as I'm concerned. Doesn't mean, again, like I said, we can't, form price action down in the $4,000, $5,000 range and chop and chop and chop for a few years. For that to happen, I would think we need some significant developments that are not priced in at all. Those significant developments must or probably include either some very heavy government intervention, regulation, some type of massive clampdown, a coordinated effort of some type that we're not aware of towards Bitcoin, or it would have to involve some type of massive security breach that compromises the entire integrity of the system. And of course, that's not something anybody expects right now, and that's another reason why we could see a prolonged, sideways chop in the market. But that said, those two scenarios, government clampdown to such an extent or some type of security breach, cannot be something that this market is trying to tell us. The 40% decline here, this price action, cannot be signaling that type of development, because we just don't have that type of evidence at hand. There's no way of us knowing that we have that type of evidence in hand, especially the security breach scenario. So for that reason, again, I don't think this is anything more than a significant shakeout. And also, we must not forget, again, that we had a massive 300 to 400% rise in a very short time frame, and it's kind of the pendulum swing where you swung way too far to one end, and we have to correct significantly on the other end. So in terms of short-term price action, going back to this daily chart, I think we have maybe one more move lower, and then I think this is the low for the remainder of the year, and I think this becomes the low that will not be breached again for this 4-year cycle and also beyond. Okay, so I think the low we're going to put in, whether it's sort of next week or some point in October, I think is going to be the low for a low that you won't see again taken out in the history of Bitcoin. Some asked, well, we haven't seen a 40+% decline in a bull market, so does that mean we're in a bear market? No. Again, same type of point. We didn't see early on in a bull market this type of impulse-like move early on. So it's kind of the cause and effect here. We didn't see such a move, so we don't expect, or we didn't expect a 40% decline, but I think it's natural. Also, one key point here, if we go to the 2015 here time frame, I'm going to switch to a daily, in fact. I think it shows it a little better. So we go to a right here. Okay, so let me zoom out a little bit. Let me make a point here. Here are the lows in January 2015, 4-year cycle lows. We came out of that, came out nicely up to this point here in March, and then built a base. I think a lot of people in this point here were still worried that the market was going to collapse. And then we had this rally here from 220 all the way to 318. Significant enough. But what was significant about this was that this action here made a new high. So we had a high in July, and it eclipsed the breakdown in January. So it was 6 to 7 month highs. We took out the highs right here, previous peak, and everybody was yelling, new bull market. It started right here. And that's kind of similar to today, not so much from the price action, but in terms of where it is in the cycle. And then what do we have from that point? 6 months to 7 months after the 4-year cycle bear market low, all the way down the $150 range, we had this massive 37%, almost 38% retracement, not too dissimilar to what we've seen today. Okay, so we had a almost a 40% decline here from July to August, over a little over a month period, even though we didn't have that massive 300 to 400% rally that we see today. Okay, so when people say, well, you know, we must be in a bear market because we're down 40%, well, were we in a bear market right here? And look what happened right after that point. We consolidated for another month or so, and then from this area here in October at the $240 range, it doubled in price within another month. It went to $500. I'm not saying it's going to double in price in a month from here, just clearly pointing out this corrective phase right here is not that different to where we are today, and that we should, again, put everything in perspective and not let fear take over here when we look at these types of declines. Another common question I received was where we stand in the 4-year cycle, and of course that's what we're here for. I know there's been a lot of fear around the 40% decline, but when you take a wider view, as I suggested earlier, and look at Bitcoin from a monthly chart, to me it all looks very healthy. And these 3 red candles, even though we haven't seen 3 red candles in a bull market, but we've only had 2 4-year cycles to look at, so the history is not very deep or very long. So statistically, we're going to be breaking records left, right, and center when it comes to comparing prior price action and extrapolating some type of meaning towards that. I think what's important to realize here is that we still are, I'm going to zoom in a little bit here, even after a 40% decline, we are around about 166% off the lows in just the first year, or the first 9 or 10 months off the lows. That to me is bullish. That to me is healthy. But also, when you look at the moving average here, and I'm not a huge fan of moving averages for timing and for trade identification, but from a trending standpoint, we now have the 10-month moving average trending higher, and that to me is definition of a bull market. 10 months is long enough for me to identify cyclical bull and bear markets, but also we have good separation still from the 10-month moving average. We're well above that. After 3-month decline, we still sit comfortably above a 10-month moving average. And I think, again, talking to the level of retracement decline, we created far too much separation too quickly. When you consider the separation in price on the bear market side down with the 10-month moving average, and then in a 6-month span flipping from an extreme separation to the downside to almost an extreme separation on the upside, it's only natural that we're seeing a good pullback and a retracement. Very healthy as far as I'm concerned, and very normal. Not surprised in the least, or at least worried by that type of pullback. Also structurally as well, it is different to the beginnings of the last 4-year cycle in 2015. And that shouldn't be surprising either. I know a lot of people are so fixated on sort of overlapping and algos. Every cycle is different. Price action develops in different ways. But then also there are similarities here that I think could be pointed out. That could be just trivia, or could be important. But look, we had 14 bars or 14 months from the high of the cycle to the low. And I've seen this in some of my earlier videos. And then we had something very similar here to the lows. 12 bars to the lows. The bull market run here was similar to the prior bull market run. And then since then, if you look at this here, it just took a long time to get going. It took, right here, it took 9 months, exactly 9 months to capture the 10-month moving average. We captured that 10-month moving average here in 4 months, and it started exceeding it in 5 months. Okay, so now we're 9 months in at the same point here, when this bull market really started to get going and to start to develop its base right here, and start to sort of break out of its base and make a run towards, or move at least over time towards the prior highs. We're in a similar position right now here at the 9-month point above the 10-month moving average, where I think this move here and the corrective aspect or component to that move are about to come to an end, and then we're going to begin to see a more stable accumulation across cycles before testing that $20,000 range. The $1 million question everybody wants to know is, when do we hit 20,000? When do we break above 20,000? And then, when do we go up to a top? Don't know. That's the answer. I don't know. Every cycle, like I said, is different. We could be looking at a cycle top sooner, maybe by the midpoint, as opposed to 3/4 of the way through. This cycle here peaked 3 years in out of the 4 years. That's why you have 12 bars down. 3 years up, 1 year down. We can go 2 years up, but still see the same type of price increase over the cycle up towards that sort of $150,000 to $250,000 range if prior cycles are a guide. That can occur sooner. So in that case, if you take the low from here and you go 24 months out, then you're looking at December 2020. You're looking at a little over a year to start to get to that peak. Okay, multiple ways you can get there. But that's not that important from this point. What's important here is where we stand in the cycle, what type of exposure that you have to this cycle. Do you have the right size and right position? If you pulled out recently, I suggest that you get the right allocation now that we're in this $8,000 range. Now that we've had a 40% pullback, this is not the time to be fearful. This is the time to be greedy. And I don't mean greedy from the sense that you should be loading up again and having finding yourself in a similar situation in the future when we have retracements. I'm saying get the right allocation that makes sense, that doesn't keep you up at night worrying about the price of Bitcoin and giving you nightmares at 3 in the morning, worried that you've just lost 20% of your wealth because Bitcoin's down 20% overnight. That's not the position you want to be in. But just also be comfortable with the fact that we are still in the relatively early stages. We haven't closed the 1 year mark yet. We're still 3 months away from the 1 year mark of a 4 year cycle. 4 years is a long time. We're not even a quarter of the way through, and we've already seen price up 160%. So we've got to keep that in perspective when we're looking at this. If you got in early, you're up 160%, you're doing phenomenally well, and you should be well now positioned to take advantage of the next move higher as it begins. We just need to be patient with that move. Some have also asked about the halving that's coming up next year and the impact that's going to have on price. Look, the halving for me is not as significant as people tend to believe from a shorter to intermediate time frame. The halving is obviously extremely important to Bitcoin supply and therefore its supply demand mechanics and therefore price, obviously. But for me, that's baked into the pie. It's baked into the price. People know it's coming. It's not like there's a sudden supply shock next year that people aren't aware of, that haven't planned for. It's just part of the process, part of the 4 year cycle. To me, we've seen evidence in other assets like Litecoin, and people can say, well, Litecoin's not Bitcoin. Yeah, it's not, but it still has the same supply-demand dynamics. We saw everybody scream and jump up and down that they need to get in before the Litecoin halving because it's going to explode. And what happened? It went down like 50%. I'm not saying it's going to happen to Bitcoin. I'm just saying the whole halving narrative, when you look at it, has, to me, no significant evidence that it impacts price around the halving itself. It doesn't impact price overall, of course. It impacts the supply of Bitcoin. But we've seen the halvings right in the middle of major 4 year cycle bull markets. And to me, that's just, again, part of the 4 year cycle. And I don't think it's anything that you want to be timing. I don't think it's anything you want to be front running. I don't think it's anything that makes a difference. What makes a difference is getting a position early in a 4 year cycle and selling late in a 4 year cycle. Just like here, get in early, hold on, don't be adding at the point where it's near prior highs. Certainly don't be adding in new all-time highs. Nobody should be adding any Bitcoin, in my opinion, above the $20,000 range. Hopefully not above the $10,000 range. You have a gift right here at the $8,300 level if you didn't get in with many of us at the $3,800, $4,000, $5,000, $6,000 range, $8,300 when we are looking at a potential 100,000 plus is still a gift and still more than a 10x opportunity that you have in front of you. You don't want to be looking back in a few years saying, I knew it, but I was just scared. I saw 3 red candles, or I saw somebody post this really convincing Elliot wave chart that showed it going back to 1,000 or something like that. Again, that's why we place enough of a bet where it makes a difference, but it doesn't kill us. Think of this as a call option. If anybody trading options, think of this as a speculative call option. Think of it as something where you don't need to put much in, but you consider the trade mostly lost. So you place your investment or your trade, and what you put in, you're kind of okay with. Well, never okay with, but you're risking that, knowing that there's a chance that you won't get that back or just won't do anything. Okay? And that's why that allows you to sleep at night. That allows you to have a manageable position. But the upside potential, the asymmetrical opportunity still exists there, where you don't need to put a whole lot to get a huge amount in return. And that's the way I approach this. That allows me to sleep at night. That allows me to capture the gains because I get in early. It's better to have a small position early than a huge position up in this middle portion of the cycle. Okay, because you're only dealing with a 4x or a 5x. Here I am saying only, but you get the point. 4x, 5x here in a larger position will never beat a small position that does 20x and 50x down the bottom here. So my whole point of this is get a manageable position early and just hunker down and be comfortable with it and be appreciative of the gains that we're seeing here. Take the corrections in stride and hold on. And if you don't have a big enough position on the correction, add on the correction. Never be selling into anything more than a 20% drop. If you want to sell because you have too much, sell on the peak. Sell when price is above the Bollinger Bands, not below the Bollinger Bands. Okay, buy those dips if you have to get more of a position. If you are dollar cost averaging because you don't have enough, but you're working and you're getting income, then obviously keep buying, but buy on those dips as much as possible. I cannot tell you how many people I've met in my career who have lost money on a bull market when they've been early, and they've been proponents of it. They've been vocal about it. I'm talking about friends and even myself personally in the .com boom, for example, in 97, 98. My portfolio and portfolio of friends, I was pretty young at the time, but we were up hundreds and hundreds of percent using options as well. Margin, of course, up just ridiculous amounts, and then it all came crashing down, but we didn't believe that it would end. We didn't believe that it could end. And as price went down 30, 40, or 50% in some of these .com names, we doubled down and we borrowed more on leverage and thinking that, well, that was an opportunity. Not realizing at the time that we were so then late in the cycle, even though we were in early and on paper had massive gains, we didn't think it would end, and we doubled down and tripled down. And also we sold early sometimes. So we sold early gains and then we bought back later at higher prices, similar to what I think people have done here, where they sold early because it went from 4,000 to 7,000. Then it went to 10, 11, 12, and they missed out, and they were afraid it was going to go to 20 quickly, so they bought more. And now it's back to 8 or 9, and they've dumped it. So net, after a 160% increase, some people are actually down on a dollar standpoint. And that happened also during the 05, 07, 08 stock market, and it also happened during the gold bull market, where a lot of people I was with, trading with in some forums, for example, were all over that market. But of course, when it topped, they kept buying to the top, kept adding to the top because they were making so much, but they were greedy and they wanted more gains, and they kept adding near the top. And as it dropped, instead of selling, instead of taking profit, they thought that was even a bigger opportunity, and then held the market all the way down to massive losses and declines. So the biggest takeaway from this is Bitcoin can get to 100,000, 150,000, but how you invest, how you rotate your capital in and out of Bitcoin is going to be very important. Decisions you make are going to be important, and that's why you want to be greedy early in the cycle, okay, in accumulating, and then you don't want to be holding and adding. I don't want to see anybody adding Bitcoin above the $20,000 range. I won't be buying dips above the $20,000 range. That's why I have a bigger stack now, and I have a strategy, and I'll get into that in a minute, of reducing my exposure happily, even though knowing that I expect price to go higher. I will be happily reducing my exposure on the way up and be content with a plan or a strategy that gets me out with a certain level of capital realized from that. Some people were like, well, you're leaving so much on the table. If you think Bitcoin's going to 150 or 200, why are you selling a certain tranche, 25,000 or 56,000 or 100,000? And again, I've been through bull markets before and bear markets, and it's impossible to time every single move. And I want to be able to go in strong and start taking chips off the table at certain predefined points, because it takes the emotion, takes the bias out of the investing. If you go in with a full stack and you try and hold and hold and hold, you're going to puke your position significantly on big pullbacks, and then you're going to kick yourself for having such good profits that you may have cashed out on, but then you're sitting without a position entirely, and then you end up buying back higher. I've seen it too many times. Whereas I think if you have a strategy going in for the next sort of 2 to 3 years, that you're going to sell at certain predetermined levels, it takes a lot of that stress out of the strategy. And you may not end up taking a full, the full prize out of the cycle, but I bet you'll beat 90% or 95% of the hodlers who think they can ride it all to the top and cash out at the top. So that strategy I'm going to cover next in the 4-year cycle portfolio. So getting into the 4-year model portfolio and discussion on strategy, let's go into that now. So firstly, the 4-year journey website is the number 4yearjourney.com. Please check it out. Subscribe to the free new email notification. On there we have the content that I publish, and then also the model portfolio that I have. So what's new? This is new. 5 positions, 5 Bitcoin bought and 9,675. I talked about buying 5 more Bitcoin on a dip, because I said at a 35% decline in a bull market, to me, that's something I don't want to give up, and it's a good opportunity. That went along with the buy of 25 Bitcoin at the $4,000 level. This here illustrates the power of buying early. 5 Bitcoin for 48,000, 25 Bitcoin for 100,000, right? So that tells you, again, going back to my point on the monthly chart right here, getting in early and sitting will get you more Bitcoin and less stress, as opposed to being timing this and trying to get in and out and accumulating more Bitcoin. It's only going to backfire. But going back to the portfolio, I talked about buying at 8,500. I talked about that in the videos. I talked about my reasoning behind that. Most people in the comments thought that was not going to happen. No way to get back to 8,500. I was patient at that level for 2 months. I had bids in, limit orders to buy at 8,500, but I bought one day before the drop at 9,675. Was it a mistake? Yeah, I guess in hindsight, it was somewhat of a mistake. I could have bought this position for around $5,000 or $6,000 less than I did. But I have my position, and I'm happy with that, because again, at 9,600, I'm looking at 100,000 plus at cashing out. So in that context, I'm fine with it. Okay, I could have got a slightly better entry. I planned on that entry, and I didn't get it. And the reason for that, to be honest with you, is simply that right at this level here, before it dropped, I was looking at the cycle condensing and then possibly moving higher and breaking up. And for that reason, I thought if the market moved higher back to 10 or 11, I was not going to get that position. And there was some level of FOMO getting a little more, but also at the 9.4, 9.5 level, I thought, well, it's only $1,000 above where I plan to get in. I'm comfortable or okay with adding at 9.6 as opposed to 8.5. So that's the reason for adding at the 9.6 level. If you, and like many of you did, instead got in at the 8.5 level as I planned, kudos to you. Congratulations. That's very good. Now, I've changed one target here. I've gone over my strategy quite a bit, in fact, in the meantime. And I have now changed from 16,000 up to 28 as my first big target to sell 5. And I have other targets. I don't want to share them with you right now. I have actually outlined most of the model that I'm planning on using. And of course, it's fluid, right? As time moves on, as evidence changes, I change my model as well. But most of the model talks about or looks at selling most of that 30 Bitcoin by the top of the next cycle, hopefully well into the 6-figure range, and hopefully for a gain of over 3 million on the buy. So on the investment of 148,000 to around about 3.3 or 3.4 is the goal on this gain. First sell at 28,000. Again, some people are like, well, why are you selling anything? If you're so confident on this, why are you selling anything? Well, let me just quickly go back to a monthly. I talked briefly about this being a left translated 4-year cycle, how I don't believe that's possible. It's too early, it's too soon, it's too quick. But what is possible, at least more plausible than this being a top so soon, is a move to new highs, something like this, maybe up to, let's just say 35, 40,000 by April 2020, and then that being the top of the 4-year cycle. And then sort of chopping to the next 4-year cycle low. That to me has some level of possibility that I can't ignore. And I want to be able to make sure that I at least come out of this with, getting some of my money back, right? Or getting my investment back. And then allowing me to then ride the next 4 years, essentially, or 3 years from that point, 2.5 to the next low with a position and not absolutely freaking out. So that 28,000 level was just a level I determined that I think we can hit in a left translated scenario where it just doesn't meet any of the expectations that we have and that I have, doesn't sort of mirror prior 4-year cycles, but does something significant enough. So 28,000 was a line that I kind of drew in here, arbitrarily, of course, that I want to take some off the table. And by taking 5 off the table at 140, it essentially matches or gets very close to the investment I made. So at that level, I will have my investment covered. I'll be riding with really no risk to starting capital, and I will still have 25 Bitcoin. And that will then allow me to take advantage of kind of, not advantage, but allow me to ride the worst of scenarios or situations. Because if we do get something like this where it pops to 40 and then comes all the way back down, I'm not sure what I would do or what you would do at that level. What if it gets up to kind of 38 and comes all the way back to 10 or 12? It's possible that positions can be dumped. If I can get out and get my investment back at that point, I still believe in Bitcoin's long-term viability and future, and I would be able to hold my 25 for an extended period of time and just weather the storm and weather it out for 2 years or 3 years or however long it takes. So that's the reason for this sell right here. The second sell, I'm fairly comfortable, very, very confident is going to be at the $56,000 level. And that $56,000 level represents a 1 trillion market cap for Bitcoin. I think that's a significant number. And again, that will allow me to capture a lot more of the gains. It would be pure profit at that point, and hopefully easily 1 year removed from all the buys. So capital gains here in the US would be treated as long term. The hit will not be as bad. So I would take out at 56,000 another 5 Bitcoin, then still have 24 Bitcoin left to be a little more selective on the way up. But for now, that's more than enough sort of forward guidance on kind of how I'm going to approach this from a sell and exit standpoint. Then the rest of it, I get a little more subjective with. I get a little more price action, sensitive, I guess. And not so much on whole numbers. There probably would be a whole number sale at around about the $100,000 level as well. And then from then on, it would be maybe a combination of some type of moving average cross model or just my read of the tea leaves, so to speak. But that's going to be a fluid process in the future. That's a good problem to have, of course. If we get up to the 6-figure area and above, then we're talking about significant 20x gains and more on the portfolio. And at that level, it does warrant sort of more of an active hand, an active stewardship of the portfolio. Bob, where are your stop losses? I keep hearing that. I hear people say, "You're horrible." What type of risk management is that where you don't have a stop loss? Well, I don't have a stop loss. I've gone over this, but I'm going to go over it again. I don't have a stop loss because my stop loss is my position, in the sense that I don't have a big enough position, again, around 5% of net worth. People risk 2 and 3% on one single trade that lasts for 24 hours or 48 hours. I'm risking 5%, okay, on a trade or an investment that's 2 to 4 years out in time frame. Again, it's the asymmetrical call option-like structure or nature of this investment that allows me to say, you know what, I don't want to worry about a stop loss. If I put a stop loss in at 6,000 or 6,500 and it gets wicked on a massive capitulation and then I'm out completely and Bitcoin goes to 100,000, I don't want to have to deal with that situation. I don't have to deal with getting out. I believe in the long-term viability. I believe in Bitcoin enough where I'm saying, you know what, I will risk 5%. Okay, and the only thing that's going to basically put that at risk is massive clampdown by government, or like I said earlier, some massive security breach that really sends Bitcoin to its knees. Otherwise, I feel confident getting in at an early point in the cycle, getting in at a lower price point that I'm not risking my capital. I may not be making a gain in the long run, but I don't feel I'm risking my capital. But again, even if I was to lose that, I'm losing around 5%. And for me, that is an acceptable loss considering the potential and the reward that this chart offers. So for that reason, I don't have a stop loss. I feel that it's going to allow me to trade or to invest or stay into this in this cycle in a much sort of stronger fashion, stronger hands. Next question I got a lot of was a combination, or let's call it the miscellaneous bucket, of things to watch out for, or what I thought about certain things like, the Bakkt effect or moving averages below 200-day moving averages, one example. Someone was asking about the 50 days, someone was asking about the 121 or something specific like that. A lot of questions on Elliot wave, Mayer multiple, stock to flow models. Look, I don't want to discredit any system or anybody's process for identifying trades and investments. There are many strategies and toolkits and tool sets out there that do work, especially if applied correctly and applied with the mindset that nothing is perfect, just like cycles. But for me, I don't like to complicate my analysis and my work. I have a certain system or strategy that I use with cycles, and I found they work best when I use few other accompanying strategies that go with that, and even indicators I like to keep to a minimum. I will use moving averages for sort of trend assistance, but I won't use them in an absolute fashion to determine if I'm right or wrong or anything like that. So I don't have a specific opinion on any one of these things. Again, some of these may be valid to you, but to me, I think they provide noise, and it doesn't help me overall with successful investing. So for that reason, I think I'll just leave it at that. I don't have a specific opinion on any one of these. Bakkt may be a little different here. This is something that's not really a strategy, but I don't think Bakkt had any effect. Actually, I'm almost certain it didn't have any effect markets were in the position in consolidation and were in a very low volatility, sideways trading market that were ready to move, and the Bakkt event was just one of those talking points that may have been a catalyst but wasn't the cause for the decline. Catalyst meaning that once some volume came into the market, some volatility, the path of least resistance was down, and the cycle, towards the end of the cycle, began to take control and price moved lower. So more of a coincidence than anything, even though it could be a catalyst. So that's my only sort of talking point on Bakkt and its impact on price. I always get questions on altcoins. I never really answer or address altcoins because this is a Bitcoin journey. Bitcoin is pretty much the only cryptocurrency or crypto blockchain project that has any real success. I don't think anybody can really argue with that unless you are very much biased towards any one project. But it's the one project that has a real significant use case. It has a network, a real significant network behind it, and it's the one project I can see being successful and getting me to the point as an investor where I can realize a gain. And to me, that's important. Now, does that mean Ethereum is useless, Ripple, and all these other projects? No. A lot of those will probably outperform Bitcoin in the long run. Some of them will. Problem is there are hundreds, if not thousands, of projects and coins, and picking the right one, picking the successor, is virtually impossible without pretty much betting on most of them. And then, of course, that's going to be a net loser in the end. So what's my view on altcoins? I'll give you a little bit of what I'm doing here. I do have a small position overall in some altcoins like Ethereum, like Ripple, like ADA, like EOS, mostly because one or two of these projects may go up, 1,000% like they have done in the past. And I want a piece of that. And again, it's not a big exposure. It's a relatively small position, but just like how I talked about Bitcoin's asymmetrical opportunity and the call option type structural nature of this market, I see those even more so as being call options. You don't need to have a really big position in something like Ripple, for example, if it is going to $10 a coin or $15. Obviously, it's not going to 589. I think that's the craziest idea in history. But let's leave that at that. If Ethereum's going back over 1,300 or 1,500 all-time highs and beyond, then again, that's a nice move from this level. And so, same for some of the other altcoins. So my final thought on this is I do have a small position in a select group of them purely because I want to take advantage of that. And if they do go through a significant pump, I would be selling right away. Going to end with a little brief note on macro view, gold, economy, stocks. This was a question that came up quite a bit. Unfortunately, it's a very, very deep question and one where I would probably need another hour video alone addressing these topics. I do cover actually stocks and gold and the economy pretty extensively in a different newsletter that I write called The Financial Tap. Been writing that for around about 10 years. I do have some pretty firm views on where I see the macro landscape today. So very briefly, let's touch on each of these. Gold. I think gold is breaking out of a 6-year consolidation, coming out of a bear market low at the end of 2015 and 16. It is now past the accumulation phase, getting awareness, and I'm very confident that it's making its way back up to all-time highs at the $1,920 level. Pretty much been all over this more recent gold rally coming out of sort of the $1,300 range. Sold pretty recently, waiting to get back in, looking at end of November for a new cycle low for gold. Bullish on gold. It has been, last time it topped was in 2011. It's been around 7 years now. Gold goes in pretty clean and clear-cut 8-year cycles. We're in sort of year 2, getting on to year 2.5 now in gold, so I'm very bullish on gold overall. I think it has a lot of potential. I like silver as well. Silver will outperform gold in a bull market, always has, always will, and will underperform significantly in a bear market. The gold-silver ratio is near a high, and with gold now beginning to break out, silver has the opportunity to get up to $25 and $30 in a very, very rapid manner. Now, stocks and the economy, they are somewhat intertwined. Economy is looking weak. The global economy is looking even weaker than the US economy. Trade obviously has been impacted across the board with tariffs and threats of more tariffs. So there's quite a bit of instability there on the economy front. That hasn't translated into stock weakness. Even some of the European stock markets, for example, are not that far from highs. Obviously in the US, we're not that far from highs as well. Overall, stocks are doing okay and holding up, and valuations get richer and richer. The stock market is now in a 10-year bull market here in the US, which is pretty much a record. Everybody's been talking about a bear market in stocks for years, and the people who have been bearish on stocks for years have been consistently wrong, consistently on the wrong side of the market. It's cost them a lot of capital trying to predict the bear market. A bear market, mind you, in stocks that typically only goes down around about 30%. So people have been out of a 400 to 500% rally in the stock market, just from an index standpoint, trying to predict a 30% decline. That's just ludicrous and crazy. People are looking at the stock market right now, thinking at 10 years, with probably a recession overdue, thinking that, again, they're going to hit the top of the market and ride a bear market lower. I don't know. I think the economy is facing significant headwinds, but here's the deal. You can't fight the Fed, okay? Obviously a cliche to some extent. People talk about that nonstop, but the Fed rules the market. The Fed and the ECB and the JCB and the Chinese government, they're all outpacing each other, outdoing each other in terms of easing, in terms of providing liquidity, in terms of providing fiat currency into the market, in terms of buying assets and propping up assets. And all of those central banks are down a path of no return. They can't return from the process and where they've gone and where they've come from. And for that reason, I don't want to be bearish on stocks. Yes, I think we can get another correction. Yes, we can even get a short-term bear market. But from a longer-term perspective, I think you need exposure to stocks. You need to be invested in stocks. And you may want to be able to trim on big moves, and you want to be able to load up on big dips. But right now, if you look at a chart of stocks, I'm going to flip over to one. Here is a weekly S&P 500. If you look at the peak right here, January of 2018, almost 2 years ago, in fact, and we are right at that price point. So in 2 years, we've gone sideways. Of course, we've got this big rally, a huge correction, another rally. The arrows represent the weekly cycles, around about 26 to 28 weeks in length on average. We have these clear-cut cycles, but we are also forming an inverse head and shoulders here. If you look at this, shoulder, 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 possibly coming up here in November. To me, this is a massive consolidation in a major uptrend, in a major bull market. It is similar in nature and structure, and we're at this point right here in the equivalent to this 2015 2016 move, with a couple of big corrections in that process. This is where I think we are. It's hard to believe that we're going to go higher from this point, given the backdrop of the economy, given the backdrop of where we stand in a 10-year cycle with a recession, many would argue is overdue. But the fact is, if you recall back only sort of 2 or 3 years ago, in the 2015 and 16 time frame, valuations appeared to be just as rich. The market appeared to be just as extended. It was 7 or so years in a bull market. Everyone thought it has to end, and it didn't. And it went from this 2100 level down here at 2070 all the way up to 2080. So that was a massive move. I think it can do something similar again. We haven't really seen a massive blow off top. Maybe we do see that now going into the next election. So there's a lot of possibilities here. I think as long as this structure here, the lows staying higher, remains in place, as long as the S&P remains above this June 2019 low, then I think you want to stay bullish from the long term. I think you want to have your 401k, your retirement, your portfolio, for example, still exposed to stocks and, of course, some level of bonds, and the bonds have had a really good run of late. But you want to be able to have that exposure. Let me flip over to gold. I talked about it before, but here it is here. So gold had this massive sort of base here. Here's the bull market top. Okay, we had this big drop, capitulation, and then this despair sort of phase. Here's the bear market lows here in November, and this is the accumulation phase. This is the realization, the breakout right here from this line here. And now we're up to this point. We just touched the bottom of this big cluster where we dropped in 2012. I think the next point is a retracement. We're in current right now. And then I think we come back up and we start to spend a couple of cycles. And these cycles are around about 26 weeks as well in length. These are the weekly cycles up towards the $1,900 range. Okay, so that's what I'm looking at for gold and for silver. Something similar here. We are probably flagging right now on the weekly. Had a nice move higher, but I think we can get up to this $27 range in very, very quick fashion. That's about a 70% increase from this point. That's my overview of gold, silver, the economy, and stocks. Just taking it back now to a summary. All right, I'm just going to close here. I'm going to recap very quickly. So again, no, I'm not concerned that the bull market is over. Yes, I'm still invested. Yes, I still believe in the 4-year cycle and a 6-figure Bitcoin price. I covered the fact that you want to have a reasonable allocation, an allocation to Bitcoin that you can sleep at night with. It's going to help you. Trust me. You're going to realize more of a gain with a smaller position than you will with a larger gain. On paper, that sounds ridiculous, right? Because on paper, you're looking at purely the math. But the math doesn't always add up when you consider the human in you and me, the human element to trading and investing, and taking a bigger position into a bull market is most likely going to result in you not achieving the maximum success of that cycle. I prefer to have a more deliberate position that is structured and that I know where my exit points are along the way, and be content with taking X amount out of the market that I know in advance. Also covered the fact that this cycle, the 4-year cycle, looks a little different to the prior cycles, but at the same time is not all that much different. Don't get fixated on past action. Don't get fixated on certain moving averages that sort of shake you out of position. Generally, when you're bearish about something, it's because, again, you're over-leveraged and you're concerned and you're fearful. Fear creates this emotion in us that where we go seeking confirmation of our fears. As we do on the greed side, we seek confirmation for our bias to keep us in or to make us buy more or do something we necessarily shouldn't be doing. Fear works on the same sort of level, on the other side of the spectrum. Just avoid that. Have the position again that you're comfortable with, and the fear level goes away, meaning you won't be reading so much into the daily and also the weekly charts because the fear level is just not there. Your control is what we seek. If you don't have your full allocation based on what I suggested, go out and get it now. At this level, yes, we may drop a little more. It's too hard to time right now. We're already down 40-odd%. This is not a time for you to be getting cute. You may have gotten even lucky. If you didn't buy earlier, you may have gotten lucky here, and this is an opportunity to get back in at a different price, at a lower price than you may not have if you had acted earlier. So that could work to your advantage, but don't let the market sort of get away from this point. Once it gets above 10,000 again, it probably won't turn back, and also it becomes harder and harder to buy and get your position. It also showed you how getting a sort of a position at a lower price point really does help in the longer term scheme of things. So that, my friends, is the 4-year cycle update, my latest video. Again, this is all off the cuff, right? I don't sort of plan any of this. I briefly go over an agenda. So I know it's a little scattered and all over the place. I apologize for that. Take what you want out of it. learn from tidbits of this. Some of it applies to you, some of it does not. This is just my journey. This is the way I'm approaching it, and hopefully some of it is helpful to you. As always, thank you. I appreciate your following and your sharing, and I do wish you all the best, honestly. Take care. Good luck.